Australian dollar. Why the Aussie is the global sentiment gauge. If you want to know if global market are feeling confident or terrified, don't just watch the news watch, also the Aussie dollar. Recently, as optimistic signals emerged from the Middle East ceasefire, Australian dollar didn't just recover, it blasted through key resistance levels. Today, DBG Markets is breaking down why the Aussie is called the world's most sensitive risk-on currency and how it can be driven by market sentiment. The Australian dollar, or the Aussie, is widely recognized as the risk currencies. This isn't an accident. It's built into Australia's economic DNA. As a powerhouse supplier of iron ore, coal, and natural gas, the Aussie has the genes of a commodity currency. When the global economy is humming and markets are confident about the outlook, demand for these raw materials skyrockets, driving the currency's value up. In short, the Aussie isn't just a currency, it's a thermometer for global industrial activity. In the world of trading, the Aussie follows a very straightforward sentiment model. When the market is in risk-on mode, meaning stocks are rallying and geopolitical tensions are cooling, money flows out of safe havens like the US dollar or the Japanese yen and pours into the Aussie to chase higher returns. On the flip side, when panic hits, like we saw with the recent oil shocks and bear market fears, the Aussie is often the first to get slammed. It represents uncertainty, and in a crisis, uncertainty is the first thing investors sell. Let's look at a real-time example. Over the day, market sentiment shifted fast due to the de-escalation in the Middle East. We saw Australian dollar pull off a massive rally in just a matter of days. This proves one thing: the moment global sentiment turns positive, the Aussie is the strongest front-runner in the rebound. If you're trading AUD, you can't just look at the Reserve Bank of Australia. You have to watch the ripple effects of global economic growth. To wrap it up, the Aussie is the pulse of a global economy. Of course, sentiment isn't the only factor. Monetary policy and Australia's own economic outlook matter too, but on a macro level, it is a precision tool for measuring the market's appetite for risk. In this volatile second quarter of 2026, if you can read the Aussie, you can read where the big money is moving. This is DBG Markets, keeping you ahead of the curve. See you next time.